Hello and welcome to the Trading Zone. I'm Joe Teague, portfolio manager, Rational Equity Armor Fund, Equity Armor Investments, of course. I'm here every Monday at noon, breaking down the market, looking at the week ahead, and it's going to be a big week ahead. Can't wait to talk to you all about it. It's going to be exciting, and of course, you can see the title today. We're going to be talking about the AI boom. Are we riding the next great liquidity cycle? Yes, we know the Fed 2 weeks ago talking about all their rate cuts. There's a lot of other easing central banks around the world. So it's going to be, to me, people are going to have to make some hard choices here and figure out where to put their money. Cash is not going to be a good place to have their money for the short term. At least that's the way it seems. Maybe people will look to hide out in some risk assets. Some people are going to choose, of course, to hide out in assets like gold, which have their own risks. But we'll see. It will be fun to watch. Thanks again, everybody, for joining in. Remember, I'm here every Monday. I can see your chats if you want to say hi. I can see it on the screens. I'll bring them up. Anything relevant comes up this morning. I was a guest, as maybe you can tell by the tie. I was a guest on CNBC this morning. If you could bring this up, this was me and Andrew Sorkin. Look at that handsome man next to me talking about the tech cycle. Of course, my preferred way. You probably know, long volatility, long stocks. That's how I trade. That's how the Rational Equity Armor Fund is. What a treat it was to be on the show. I think we'll be doing this again. Very exciting news for me. Really loving it. Also out there, if you follow Joe Teague, if you are subscribed to the Ripple Effect newsletter, you can get this on equityarmorinvestments.com. Click on the Ripple Effect and you will see this week's newsletter. Boy, it is a lot of parallels we're seeing from the 95 cycle to the current middle of the 2020 cycle, the AI boom compared to the .com boom. There's a lot of potential upside, but just because it looks a lot like it did 20 or 30 years ago does not necessarily mean it's going to be exactly the same. I'm just excited to watch it all play out. We have no idea what's really going to happen. There's so much going on around the world. So let's just get into it. Why don't we? Why don't we just jump into the slides and talk about all of it? Yeah, we got some volatility. We got the VIX. This is 2025, how it has looked. We have seen some spikes already this year. It's hard to believe. We had these tariff spikes way back in April, huge increases in the VIX, huge spikes in volatility. We announced we weren't going to do, the tariffs weren't going to be as bad. I don't know. It seems like the tariffs have kind of been on, off. That spike was a big panic. And the market's really been able to weather it through, so much so that this weekend we had more tariffs coming on, some truck tariffs, some kind of big ones to me, and the market really didn't even notice them. It's just in the background. So this is just way in the background, all this tariff news. We had lots of geopolitical news. We had, the Iran-Israel wars, the ongoing Ukraine-Russia war, lots of risk out there in the market, weathered all that. And a lot of those conflicts are still with us today, even potential for peace not coming off. We have not really seen any resolution, of course, in the market's just been able to shrug it all off. We're hitting all-time highs. The economy, as we saw last week with the GDP, strong as could be, 3.8% GDP. Wow. Even upping the 2026 projection for maybe 4% GDP. So that's what a slow economy looks like. That's what an economy looks like when the Fed needs to lower interest rates. And yeah, we're going to get the 3 cuts. The Fed's going to give us 3 cuts. We got 1, 2 more are coming. We had good GDP numbers that for the short term last week kind of brought us backwards. But I think good news is going to be good news for the stock market because the Fed has told us already they're cutting 3 times. So we're going to get rate cuts. A strong economy is going to be good for these stocks. we're going to have a long-term impacts on these rates. We're going to, the Fed can really control the 10-year yield, and maybe some investors will say, hey, the Fed's going to have to turn right back around and raise interest rates, and the 10 years will be higher because of the economic data. But I think big picture, good news for the economy is going to be good news for these stocks. Big jobs data, of course, coming Friday. We'll see how that plays out. We got the MOVE index. We talk about this week over week. This is the volatility of the bonds. The lower this volatility is, the higher the multiples go in the S&P 500. That's just how it's been over time. There's lots of liquidity in the market. These multiples can continue to be higher. It's just I'm watching this closely, something to turn around, something changing. We do have some domestic political news which might change this. We have a government shutdown might be coming around the corner. So that could be something that could trip up the market. Just because this market looks so great and it looks like it's set to continue these higher asset prices doesn't mean it has to. We could have this government shutdown. An oil spike, of course, could do something. A lot of different things could trigger this market to be tripped up here, and it's especially troublesome when you get these higher valuations. That said, it just seems like the market's least path of least resistance continues to be higher. Another way of looking at that is the skew index. We know this measures the 25 delta put 1 month out in the S&P 500 compared to the 25 delta call 1 month out in the S&P 500. Not really doing much, not really giving us any sign one way or another. Volatility just remains subdued, not cracking out higher or lower. It is interesting, though, today we got the market higher, we got the VIX higher. It's not just normal Monday effect. We got this is actual real implied volatility trending higher on a Monday when the market is also higher. So we should be wary of that. Sometimes that means a move is coming. Sometimes that move is to the upside. Sometimes it's to the downside. I'm going to be watching that. We got a lot of trades going on. We currently have a lot of trades on in the market long. We're going to be looking at a trade, maybe a little protection trade. I'm going to do that at the end of the show. Stick around for that. The VIX futures, not really an outlier here. It is interesting, though, that it is a little bit flatter here. We got the spot a little bit closer to where the front month cash is. That's interesting to me. I think I would be very careful trading these front month futures. They could potentially move in a big way. If we get a vol pop to the upside, these futures are going to move. If, of course, and the reverse will be true too. If vol sells off, these futures are going to have to come down and meet the cash in a big way. But bottom line is, when you get a flatter front month to the spot, you're going to see more volatility in that front month, and we could be due for some VIX futures volatility in the short term. Now, of course, last week we got these records in stocks. A little bit of a pullback last week. Nice bounce back today. We'll see if that does indeed hold. More people looking at precious metals today than stocks. Even gold, really all-time highs, just absolutely booming, rocketing to the upside. The rest of the market's doing pretty good too. Tech beating the S&P 500 today. We're going to be really waiting for the jobs number on Friday. We will have a big key on how the economy is doing. A little bit of inflation data will be in there too. But for me, my money, strong economy. We already know the Fed's going to cut. That'll be good for stocks. There'll be good news is good news. Bad news is bad news. That's what I'll be waiting for to see on Friday. Okay, like I said, already talked about all that. We're a lot to look forward this week. It is a big week. Next week will be the follow through on all this too. Sometimes you get that big follow through happening the week after a big economic data point like on Friday. Okay, we have the S&P 500 recovering today after a little bit of a sell-off last week. Nice rebound. People are looking at 6950 year-end targets. We'll see. There's plenty potential to the upside. Maybe it looks like we had a nice little dip, and investors are coming in and buying that dip. We were selling off on that strong GDP number. Again, I'm saying it's good economic data is good for the stock market. So absolutely, there is potential to the upside here if we can continue to have this strong economic data. Just can't wait to see how Friday turns out. Here is the NASDAQ, another positive uptick here. And really, really jaw-dropping is the semiconductor index, just absolutely gobstopping. Look at this. It is just off to the races. 326 it was this morning, a little bit lower right now, maybe 325. But just incredible movement here to the upside. If you're a bull, you love to see this. This is the AI trade. This is the epicenter. This is where we want to see it. Alongside, we got the Mag 7 index. You want to see this trending higher too. Love to see this at an all-time high. If a good jobs number might well do the case here, do the trick here for that. Gold, for its part, I have been talking about this, just unbelievable rally here. People don't want cash. They're looking for other options here. My guess is that this is going to be exhausted at some point, and then people might say, okay, the gold trade is overdone. Where else can I look? Silver might be an option, but I think we'll look for other metals, things like uranium, of course, just ridiculous. But maybe we're looking at copper next. People will be looking at other commodities, of course. It seems like that is in the cards here. We'll wait and see. But I think once that kind of fizzles out, I think people will say, okay, the easy money has been made on gold. People have already priced in the currency devaluations, et cetera, et cetera. Let's look at some stocks. Let's find this growth somewhere. We're going to come back to tech. And tech is going to catch the next leg of this inflationary crack up boom. That would be my best guess, because of course, this is the story here. The dollar just continuing to lose value, but it's incredible because all the other currencies are devaluing themselves too. So this is a dollar versus a basket of, I'm not sure, like dozens of currencies, but they all are lowering interest rates. They all have loose monetary policies. So it is just a race to the bottom, and that's going to mean asset prices, of course, equities included, will be going higher. Now, it's good to see this is the one asset price we don't want to see going higher. This is going to be good. I mean, if you're an oil producer, absolutely, you want to see this going higher. But this is really important for the economy to see crude staying in check here. It's not running away at all. Fantastic news to see crude in check, not causing any damage, because we know the higher this goes, the more expensive everything else goes. And that really could kind of make this inflation story much harder to navigate here. Yes, a lot of things are going to be going up in value, but if oil specifically spiked in value, it's like a big tax on everything, and nobody wants that. So this is good news for the economy. Of course, we love to see that. So finally, I want to get back to the semis here. Absolutely fantastic run up here. It's just gone haywire here. I'm loving it. Now remember, we got a lot of bullish trades going on right now. I got zero cost put Google trade where I'm long the 240, 260 Google versus a 220 put. I'm long Oracle via a short put spread. We're long NBIS with a similar trade here. So we got a lot of longs on here in the market with a lot of AI trades, a lot of news coming up in the short term for the market. I am, thinking that a big move could be coming in the market. My hunch is that it's going to be higher, but because I got a lot of longs on in the market, I want some protection down to the downside. And I got a pretty good one here, I think, for the semiconductor index. I'm just watching this 320. We broke out above here. We broke out above this 300 area. I'm thinking in the short term, bad jobs number, maybe some other something I'm not thinking of, shutdown or something geopolitical could trip the market up here for the short term before it turns back around again. And I'm just watching this 320 area very closely and this 300 area. So I'm just nervous about this void here. If we fall below 320 I think we could go right back down to 300 very easily. So that's my protection. I got a 2-week put spread here on for the SMH. I'm looking at the 300 put spread. I put that on this morning, $3.28. It will be $20 at the max value if it trades down there. Pretty good protection for everything else I have on. Of course, be happy if it does not go that way because I got a lot of other longs on. But I think that there's a potential in the short term for this trade to trend down this way. Could take this off, have my protection on, get back into my longs. or can just continue my longs, which are a little bit longer dated than this one, which is just expiring in about a week and a half, or next Friday is when this one expires. So really looking forward to this trade. Really looking forward to the rest of the week. It's going to be really exciting to see how all of these news events play out. Having a fun day trading, having a fun day watching these markets. Very interesting to be watching all of my trades. That's long volatility, long equities with this market action. Remember, in 1995 through 1999, we had the market higher, we had volatility higher. That's certainly a possibility, in fact, a probability. If we're going to be seeing a bubble, we would see the market higher and volatility higher over a long period of time. Now, on a day-to-day basis, very likely you'll see a negative correlation where when the market's higher, volatility is lower. But if you look at the long period, it's going to be an unusual period where we're going to see both potentially happen. Very possible, of course, with the VIX sub 16. And today, maybe a perfect example of how that can happen, where we do indeed have the market higher and volatility higher. So be watching that very closely. I am going to wrap it up here. I want to thank you all for tuning in, joining in. Make sure you follow, like, subscribe. Make sure you check out the Ripple Effect newsletter. And super great to have you here as usual. I'm Joe Teagay. This is the Trading Zone.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.